Good morning, Campbell McCrary here, Amvest Capital, New York City. Welcome to the Amvest Capital Inc. live webinar with Skeena Resources Limited. Skeena trades on the TSX as SKE and on the OTCQX as SKREF, Sierra Kilo Rio Echo Foxtrot. Hope you'll enjoy today's program. It will be available in replay mode. Feel free to send in your questions. Just type in your questions in the question pane of the GoToWebinar control panel or email them in. And please note this event will be available in about an hour, and you can get it most easily at amvestcapital.com/webinars and /replays. Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please note this call is for informational purposes only. Please read this carefully. Presenting today, we have Walter Coles, President and CEO of Skeena, and Kelly Earl, who is Vice President of Communications. Kelly, making you presenter. Share your screen. Welcome back to Amvest Capital's webinars.
Thanks, Campbell. Happy to be here.
Yeah, thanks. All right, we'll jump right into it. Appreciate the opportunity to reconnect with all of your attendees. I have a feeling many of them have seen our presentation before, so we'll try to hit the high points and focus on some of the newer developments in the company. Just as a reminder though, we've got two projects, Snip and Eskay Creek. Eskay Creek is our flagship. They're both located in the Tahltan Territory in the Golden Triangle of northwestern British Columbia. They're both precious metal mines, past producing mines that have shut down. We optioned them from Barrick, and now we are getting these mines back towards production. Just as a reminder, one of the awesome things about brownfield projects is the infrastructure that's already been built for us by the previous operators. But there's a pretty significant change in the last 7 years. These projects, Snip and Eskay Creek, used to be powered by diesel and propane, and now we've got 3 new hydroelectric facilities that were built right in between our projects at a cost of about $2 billion US. So that's going to be a game changer on the cost structure side for these assets. Just another reminder of why Eskay Creek was so famous. It produced 3 million ounces of gold and 160 million ounces of silver. The combined gold equivalent grade was 2.5 ounces per ton. So again, one of probably the highest grade large mine ever built and operated anywhere in the world. There's a big difference between back in the 90s when Eskay Creek operated and today. Obviously, the price of gold and silver were much lower then than they are today. And as I mentioned, they had much higher energy costs because they were on diesel and propane. So now we have those hydroelectric facilities next door, which have a huge impact. Back in the 90s and 2000s, I'm told that at certain points, energy represented 50% of the OpEx at Eskay Creek. Now with that cheap hydropower, it should be closer to 5% of our operating costs. So that's that tremendous shift in cost structure that's happened. The other big twist that we brought to this project is to look at it as an open pit. As I mentioned, Eskay was an underground mine. The question that often comes up to us is, well, like, why didn't Barrick open pit mine this? And the answer is that back in the 90s and early 2000s, the NDP government in Canada at that point was not very, I guess, favorably inclined towards mining projects. So it was considered quite difficult to permit an open pit back then. Now we've seen numerous open pit mines permitted and built around us in the Golden Triangle, and that gives us the confidence to push forward with this kind of new revitalized mine. So with that, I'm going to turn it over to Kelly to talk about the new resource that we published just about 2 weeks ago.
Great, thanks, Walt. So this is our exciting new resource that we just put out a couple weeks ago, as Walt mentioned. Huge increase in the size from our last resource, which was put out at the end of 2019. So our new global resource between measured, indicated, and inferred is sitting at 5.6 million ounces, but it's really the M&I that we care about because this is what we'll be pushing forward to the pre-feasibility study. So we've got 5.3 million ounces in the measured and indicated, but it's this 5.1 million ounces at 4.2 grams per ton gold equivalent that we will include in our PFS. And that's because when you do a PFS, you need all measured and indicated ounces. So this is a massive improvement from our PEA numbers. We had about 2.7 million ounces that we used in the PEA, and now we have 5.1 million ounces of M&I that we can push forward to the PFS. We don't yet know what the conversion rate will be from the M&I ounces to reserves, so we're hopeful it'll show, come somewhere between 3.5 and 4 million ounces. Conversion rates for projects in Canada tend to be somewhere between, say, 65 and 80%. So we're just working through that right now. But either way, we should have about 1 million more ounces from our PEA into our PFS. So this is giving our engineers what we're calling a champagne problem. They were expecting 4 million ounces of measured and indicated, and Paul Geddes, our VPX, and his team blew that out of the water and added 5.1 million ounces. So we've got about 1 million more ounces than we were expecting. So we're just kind of looking at how we can rejig the pre-feasibility study as we speak, and if we need to change the throughput or if that's going to wait until the feasibility study. So those are all issues we're working through right now, but they're good issues to have because we're extremely excited about the new resource. And the other thing I would point out is just how few ounces there are in the inferred category. So in the pit, because we're pushing forward with the open pit only mine plan, there's only 231 ounces that are inferred, and that's the blue areas you see here on the slide. So we just have a small amount of infill drilling to do later this summer, but the majority of our drilling that we'll do will be exploration drilling. So just next, I wanted to recap the PEA highlights. So again, this is from 2019. So remember, this is on the old, smaller resource. So I think you're going to see all the numbers here increase, except the grade. The grade should stay about consistent. But this shows 306,000 ounces being produced a year. Again, we're producing and shipping a straight con, a 9-year mine life, and we suspect both of these numbers will go up. So we're not sure exactly yet what the ounces a year will be. We think there'll probably be a staged increase to the PFS and then another stage increase to the full fees, but we're targeting to get this, over 350,000 ounces and hopefully closer to 400,000 ounces per year. Along with that, you're going to see the CapEx go up. So it's a very modest CapEx in the PEA of just 233 million US. We suspect this will go up over 300, which is still quite modest. And one of the reasons, well, there's 2 reasons that it's a modest CapEx. One is this is a brownfield site, so we have a lot of existing infrastructure in place, tailing storage facility, things like that. Secondly, we're not producing doré on site, so we're just producing and shipping a con, which is exactly what they did historically. So that saves from having to build an autoclave or a POX plant or something like that on site. You can see the numbers here from the 2019 study. We used $13.25 gold, $16 silver. We're probably going to be using $1,500 gold, $20 silver for the upcoming PFS, which should be out in the summer. You can see the after-tax NPV here at 5% discounts, 924 million, and we suspect that'll go well over $1 billion on our PFS study. So I just wanted to touch on a little bit on the mine plan and mostly some of the historic workings and also some other areas where we're looking to expand the resource. So we're at 5.6 million ounces global resource right now, and we're really going to be pushing Paul and his team to add another 1 million ounces to that over the next year or so with more exploration drilling. There's also the possibility to add our Snip project, which we'll get into in a second. And another opportunity is this former waste dump, Albino Lake. I'm sure you've heard me talk about it before. This is where all the waste rock was put for the mine historically. And if you recall, the cutoff grades were extremely high. So anywhere from 15 to 30 grams per ton were the cutoff grades. So anything below that was considered waste. So you can see the piles under the water there. We estimate there's a few 100,000 ounces sitting here, and we were able to drill this off this past winter. So we wrapped up in March. We put a drill on top of the ice and put 10 drill holes in there. So those results should come out in a while, and hopefully we'll have a better idea of how many ounces are there, and we'll see if we can add that to the mine plan later in life. And of course, it's always worth pointing out the permitted tailing storage facility. So this is another dead lake or non-fish bearing lake. It contains all the tailings that were stored subaqueously. Historically, it's been continuously monitored, water monitored since closure, so there's been no remobilization of the minerals or anything like that, and it has ample capacity for all the tailings we envision currently in the mine plan. So it's a huge check mark in the right direction for us, and it should expedite the permitting process for us as well. Little bits on exploration upside. So we are waiting on the results from about 5,000 meters of near mine exploration drilling that we just wrapped up. All of last year, we really focused on infill drilling. So you can see we did 83,000 meters of infill drilling and of drilling total, and 90% of that was infill. And that's because half of our 2019 resource was in the inferred category, and we needed to convert all of that to measured and indicated. And one of the main areas of focus was this northern pit expansion. So the pit didn't go this far to the north before, and a lot of those ounces you see dipping down there were underground ounces. And because we're pushing forward with open pit for permitting only, we wanted to be able to include a lot of those ounces in our mine plan. So that's one of the main areas we focused on drilling last year. I mentioned we just wrapped up 5,000 meters of near mine exploration, and we're eagerly awaiting those results. As soon as those results are out, we're going to be putting out a plan, and we'll probably put a press release out sometime in May that'll show where we'll do exploration drilling later this year. I suspect we'll probably do 25 to 35,000 meters of exploration drilling. Our technical teams put together a wish list of 137,000 meters they'd like to do across the project. We are not going to be doing all that. We are going to be prioritizing. Harold Gibson, who's a VMS specialist, pretty world-renowned, he's been at site and he's working with our team. So once we get all the prioritization done, we'll put a press release out, and we should be able to start an exploration drill program probably late May, June timeframe. Just a reminder of one of the other areas that we'll be looking at is this lower mudstone horizon, where we had this spectacular high-grade hit of 314 grams over 2.21 meters. So hopefully we'll be able to replicate some of those results later on in the year with some more exploration drilling. So Walt, I'm going to pass it back over to you to talk about some comparables.
Yeah, thanks, Kelly. So this top graph here just shows open pit mines ranked in Canada. There you see Eskay Creek at number 5. That's based on the PEA. We expect, as Kelly mentioned, the production profile of this mine to grow from the PEA to the pre-feas and then again to the feasibility. My hope is that we'll end up somewhere between Malyadine and Detour Lake as probably the 3rd largest gold equivalent mine in Canada. But the thing that really sets Eskay Creek apart is the grade. You can see there on that lower graph, average grade of open pits globally is about 1.5 grams, and Eskay Creek at 4.3 grams is over there on the far left. So, grade counts for so much in terms of margin of safety, profitability, but also there are other advantages, which you're going to see in the next slide here. This is the carbon emission sort of ranking of mines globally. We hired a consultant to put this together for us. You can see open pit mines on average produce about 3/4 of a ton of carbon dioxide equivalent per ounce of gold equivalent of production. So basically think of it as, 3/4 of a ton of carbon dioxide for every ton of gold production. Now, when you look at underground mines, you're going to see a lower number there. It's about half the amount of carbon production of open pit mines, and it makes sense intuitively because underground mines are going to need to be higher grade to be economic. But then look where Eskay sits on this chart. 0.14 tons of carbon dioxide per ounce of gold equivalent production. That's going to make Eskay Creek one of the lowest, if not the lowest, greenhouse gas emission open pit gold mine in the world. So it's phenomenal from a ESG standpoint that Eskay Creek is looking like this. Now the obvious question you might be thinking is, well, why does Eskay Creek rank so well? And there's 2 answers to that question. The first is grade. So remember, a typical open pit might be 1 gram or 1.5 grams, and instead for Eskay we're 4 grams. So we're 3 to 4 times higher grade. That means it takes us 3 to 4 times less energy, less trucks, less milling capacity to produce an ounce of gold. So that's the first reason, the grade. The second reason goes back to those hydroelectric plants that are right next to our site. So instead of being diesel and propane, we're plugging into cheap, clean hydropower. So this is going to be a project that Canada can be really proud of in terms of its ESG characteristics. Just to go over the timeline again, we have coming up 25,000 meters of exploration drilling that Kelly mentioned starting in May. Then in the summer, we plan to publish that pre-feasibility study, which is going to be a major milestone for us. We'll continue to do a little bit of infill over the course of the summer. I think there's about 300,000 ounces of inferred still left, so we'll get that all converted over so that we can use that in the full feasibility study. The target date for the feasibility study is in the first quarter of next year, and we'll look to do project financing right after that with the goal of starting construction in the summer of 2022. So pretty aggressive timeline here. I'll flip it back over to Kelly to talk a little bit about Snip.
Thanks, Walt. So as many of you know, we just released some drill results for Snip. We did 5,300 meters of drilling at end of last year and beginning of this year. We had some exciting results. We found some new mineralization below the twin zone, but it barely scratched the surface of the exploration we'd like to do. So I know our VPX Paul is going over those results with his team right now, and we'll see if we can get some more drilling done at Snip later in the year. So this project has a current resource of 646,000 ounces. It's small, but it is very high grade. It's 13.5 grams per ton gold, and this is a gold only deposit, a nice high grade, nice clean ore. So we're investigating the possibility of this being a satellite deposit for Eskay Creek. They're about 50 kilometers apart. There's a bit of a gap in a road that needs to be built to drive all the way to Snip, but we already have the permits for that. So we're investigating if it makes sense to add Snip to Eskay. But we would also mention that Hochschild Mining has an option to acquire 60% interest in this project, and they have until October to pull the trigger on that, and we're not yet sure what they will do, but we have been in contact with them continuously on the project, and they would have to spend the equivalent of 2.5 times what we've spent to earn 60% interest in the project, and they would have to put that into the ground. So we're a bit agnostic on what happens with Snip. Either we'll have Hochschild as our partners, and they're known as some of the best underground miners in the world, and we would be carried forward on this project, or we would look at making this a satellite deposit to Eskay Creek. So we don't really get any value for this project just yet, and that should be unlocked hopefully by October, either with the Hochschild option or by making it an addition to the Eskay Creek project. So stay tuned, and I suspect we'll probably be doing some drilling later in the year on Snip as well. Finally, I wanted to touch on our relationship with the Tahltan. We talk about our Tahltan partners all the time. We're extremely proud of our relationship. There's two pretty exciting things we just announced with our Tahltan partners. One, they made a $5 million investment into Skeena. I would say it must have been at the end of March now that they did that, so about a month ago. So they are now Skeena shareholders. And this came out of multiple conversations we'd had with them, with Chad Day, the president of the Tahltan. We've traveled the world with Chad and his team as part of the British Columbia Regional Mining Alliance to promote mining investment in the Golden Triangle. And he's always had an interest in getting greater ownership in the projects that are being developed in Tahltan Territory. So that's where the investment came out of. I would also note that Tahltan are part owners in the hydroelectric facilities that we will be connecting to. So they're great partners to have. The other exciting thing we just announced was the creation of a nature conservancy in partnership with the Tahltan, the Ministry of Mines of British Columbia, and two environmental NGOs, the Nature Conservancy of Canada and BC Parks Foundation. And this was a very unique situation where Skeena had a small project, 3,500 hectares, named Spectrum, where we were looking for copper gold porphyry targets. We haven't worked on it in several years, and it's right beside the Tahltan sacred mountain, Mount Azidza Ice Mountain, where they've been mining obsidian for weapons and such for thousands of years. And we were told by Chad and the Tahltan that it's a sensitive area, a special area to the Tahltan, and they wouldn't be favorable to having a mine built beside Mount Azidza, which is also a provincial park in BC. So we worked out a deal with them and the province of British Columbia where we returned the Spectrum property. The province put a no staking regime over it, and then it was turned into a nature conservancy. So that's pretty excited, and it fits in with Skeena's vision and values to support our Indigenous peoples. And we look at this as a stepping stone in our continued positive relationship with our Tahltan partners. Finally, capital structure, about 222 million shares outstanding, sitting at around an $800 million Canadian market cap. We've had a very successful year share price wise, but we feel we have a long way to go in terms of valuation. We've got a lot of exciting milestones coming this year. We're going to be hitting some permitting milestones with our Tahltan partners and the government. We're working on a permitting charter that we hope to announce shortly that'll put a timeline in place. The PFS is due out in the summer. There should be more exciting drill results throughout the year. We hope to unlock some value from Snip, and then finally the full feasibility study in Q1 of next year. So a lot of milestones left to hit, and definitely still much room for the share price to improve. So that is a very quick overview of Skeena. So with that, I will pass it off to the Amvest team, as I'm sure they've got some questions for us.
Absolutely, and everyone, very easy to send in your questions, and we'll get to them as much as possible. So, someone mentioned QuestX. Anything to add about that?
Yeah, I guess I'll take that question. You know, QuestX was just an opportunity to you know, make an investment in a company that we viewed as being undervalued. It had a $15 million market cap when we participated in their private placement. Pretty amazing. Their shares have already doubled. So our 3 million, I think we invested just over 3 million, and I think it's valued at close to 7 million right now. And look, we eat, breathe, and sleep the Golden Triangle, so we have a pretty good sense of value in that area. And so when something comes along like that, you know, QuestX has the third largest land position in the Golden Triangle and trading at a $15 million market cap, like, we didn't have to think very hard about this one. So that's why we did it.
Okay. And I'm also on the board of QuestX. That was the other thing.
Okay.
That was announced.
Full disclosure.
And yes.
Someone wants to hear from Walt, essentially beyond putting the projects into production, which is clearly very important. What opportunities do you see for Skeena to become an important gold producer in the future? So concept question there.
I mean, to be honest with you, we have our hands pretty full in the Golden Triangle, and we're single-mindedly focused on getting Eskay and Snip into production and how we might grow those particular assets. So I don't want to have any like grandiose dreams. I just, you know, we just need to block and tackle and get our pre-fees done, get our feasibility study done, get the project finance done, keep doing exploration. I mean, we've got a lot of stuff to do on Eskay. As Kelly mentioned, I think out of the 90,000 meters we drilled last year, you know, the vast majority was infill. Like, we haven't done exploration on this property. So only now are we turning to that challenge and opportunity.
Here's a very granular question. Please give details on the exploration upside of the new footwall zone at Eskay. Is 22 zone an example of that?
Yeah, so I don't have, so it was only 5,300 meters is what I'd start with. And the nature of the deposit at Snip is very different than Eskay. So we are spoiled at Eskay. It's VMS, it represents the seafloor. There's a mudstone horizon that we hit consistently everywhere we think we will. Walt is spoiled not being a non-geologist with Eskay because we hit the zone every time we think we will. Snip is a very different beast. It's epithermal, narrow veins. They pinch, they swell. They can go down to a few centimeters, blow out to a couple meters. You can be 10 centimeters away from mineralization and there's no halo and you don't know it. So it takes a lot more drilling to define ounces at Snip than it does at Eskay. So listen, we had some good hits. We hit mineralization in, I think, every hole that we drilled. And we did find some new mineralization right below the twin zone. It was very close to it. So that would be another example of those veins pinching and swelling, and they can splay. So I would say the extra mineralization that we hit was a continuation of the twin zone. So not a new vein per se, but we have added a bit of mineralization, but there's going to need to be a lot more drilling at Snip to really define any further ounces. So we're at 650-ish thousand ounces right now. I know Paul and the team would like to build upon that, but we're really going to have to sit down, look at the results that we've got, and really prioritize where the targets are in Snip. And it is exploration drilling, so there's no guarantees. That's the other thing that I would say with Snip. We love the deposit. It's clean. It's gold only. It's a really nice project. There's underground workings that are open and used that we can drill from, which makes it wonderful because you can actually see the mineralization that you're going to drill into. But you know, no guarantees as of yet, just how big we think we could get Snip, or how many more meters of drilling we'd need to do there. So I know that's on Paul's list to do later in the year, is later this summer, probably prioritize that and see where the next round of exploration drilling will be at Snip.
While we're on Snip, can please elaborate on the carried interest, free or participating funds?
Yeah, I think Kelly mentioned this in her chat on the Snip slide. Hochschild has an option to earn 60% of Snip. They have until October of this year to exercise that option. If they do, they have to spend 2 times what we spent, and then we get carried. It's kind of a complicated formula, but it's about half of what we spent that we would get carried for before we would have to contribute or face dilution. So as Kelly said, it's effectively like a 2.5 times spend on what we've spent for them to earn 60%. We're agnostic. If they exercise their option, then we're going to get carried a long ways in this project. If they don't exercise their option, then we'll keep 100% of it, and it probably makes sense for us to use it as a satellite source of ore for a central mill at Eskay.
As much as you can answer, do you have a plan, or what would be reasonable plans regarding monetizing the value of Snip? Go down the line, how will we get that valuation?
It's hard to answer while there's a 60% option kind of hanging over top of the project. So we've been saying that October is the decision point. So some value will be unlocked for Snip come October, either through Hochschild coming in, or if we look at pushing it to add it to the Eskay Creek project.
Okay, thank you. I'm going to pass it to my colleague, Stu. Go ahead.
Yeah, thanks for the presentation, Kelly and Walt. Can you touch on some of the recent M&A activity in the gold space in Canada and how you guys feel about it, and how where it puts Skeena on the map?
Yeah, I'd rather talk about it in terms of the Golden Triangle. I think the Golden Triangle, in my opinion, is the hottest mineral jurisdiction in the world. There are a lot of reasons for that. You know, it's politically stable. It's in Canada. It's got a very sophisticated First Nations groups there, with the Tahltan and the Nisga'a to the south. It's a dream in terms of mineral endowment, and we are seeing more and more large companies trying to get a toehold in this area. I think of it as like Nevada in the 1980s. Like, it's early days in the land rush for the Golden Triangle. And who have we seen come in? We saw, Newmont came in a couple years ago and bought half of Galore Creek, and then Newmont most recently acquired GT Gold. Yamana made an investment in Ascot just a couple weeks ago. Newcrest bought 70% of the Red Chris mine. I mean, the big companies are coming, and I think there's a lot more sniffing around. So in my view, the land in the Golden Triangle is only going to go up in value as more companies come in and try to fight for a position. And Skeena's extremely well positioned with, I think, probably the flagship high-grade gold-silver mine in the area.
Most definitely, thanks for that. As you're transitioning from explorer into developer, how are you building out your team?
We've already built it out. We brought Shane Williams on as our Chief Operating Officer. Shane has a tremendous amount of experience building open pit mines in the far north. He worked for Rio Tinto for a long time. Prior to that was Lundin Gold, and more recently he was with Eldorado. Shane's built out a whole team of engineers underneath himself. And I'd add that we work closely with Ausenco. Ausenco led our PEA. They're leading our pre-feasibility and will be leading our feasibility study. I think we're in very good hands with those guys. So, as of right now, we've got the team in place to build this asset.
Yeah, great. Would you consider uplisting onto one of the major US exchanges? Some other Canadian companies have done that, the last couple of years.
We're working on it right now.
Right. The carbon footprint slide, would that be different if it was a greenfields asset versus a brownfields, and some carbon footprint had taken place, in the past?
I don't think so. I think the drivers of the carbon footprint are the grade.
Yep.
Probably the biggest. And then the second is the access to hydropower. So it doesn't really have to do with like roads already being built or the tailings facility already being there. It's those things.
Yeah, it's once you're already in production, how many carbon equivalent tons are you producing per ounce of gold you're producing?
Yeah, and we are looking right now at the trucks and the equipment at site, whether we can, somehow come up with a green solution for those items as well.
Yep, fair enough. And then with slide 10, how you were hoping to get production up on an annual basis, how do you envision that? Is that an increase in throughput or putting through higher grade sections to the mill first?
It's probably going to be increase in throughput.
Yep.
And in fact, in all likelihood, if we it's going to be easier to find. I'm speculating here, which Kelly always shakes her head at me when I do. That look, a 4 gram deposit's pretty rare and unusual. I would think as we continue to grow it, maybe it's 2 gram material or 1.5 gram material that we find that we add to late in the mine life as a way to extend the mine life.
Yeah. Would any bulk ore sorting help here at all?
Yes, we've got some major studies underway on that, and really the opportunity there is not to upgrade the existing ore, and the reason why I say not existing ore is because in the studies we've done so far, we see a loss of about 35% of the gold when we do ore sorting, trying to sort out the sulfides. So we do not want to take 4 gram material, increase it to 8 gram material, and lose 35% of the gold. That doesn't make any sense. Where we do see an opportunity is to target material that's classified as waste. Like let's say that the cutoff grade on the mine plan is 1.2 grams. That means 1 gram material would be waste. If we could take that 1 gram material and upgrade it to 2 grams, even if we lose 35% of it, we didn't have any of it to start with. So that may be another way that we increase the overall resource and the amount of mineable gold here at this project. So that study is not going to have an impact on the pre-feasibility, but it should be done such that it may have an impact on the full feasibility study.
Okay, thanks for that. I'll pass on to Gabe.
Hey, Walt and Kelly, how are you guys? Thanks for the presentation. So we talked in the past on other webinars about trade-off study between Snip and Eskay. Just wanted to see where you guys were on that in terms of combining the two, and then how you're thinking about the transportation between the two right now.
Yeah, so it's really a question of, not to beat a dead horse, what Hochschild is going to do. If Hochschild comes in and it becomes the operator, it would seem like it's likely to be a standalone project, and Skeena is just carried for the 40%. If Hochschild does not exercise their option, then it would seem to us that we build the road and we truck the ore over to a central mill at Eskay Creek, and we're doing some work right now on the economic evaluation. So what does it mean either way for Skeena? What are the economics from either perspective? So we're doing work, but at the end of the day, it's not our decision. It's Hochschild's decision as to whether or not they want to exercise the option. So we just, keep pushing these projects forward, and we'll have clarity come October.
Got it. And then in terms of how you're seeing, you mentioned you're going to go to a full feasibility study from the PFS here now. How are you looking at, I guess, budgeting between today, and then in that future feasibility and all the exploration opportunities you have in between?
Yeah, so the budget for the balance of the year is around 55 million Canadian. We've got about 30 million in the treasury. So at some point in the balance of this year, we'll have to do a capital raise. We have no revenue, so I don't think that's a surprise to anybody that we're not gonna have revenue probably till 2024. So we've got to cover that gap. I think we probably do one more financing before the full project financing. And this is such a robust project. I think we will have lots of options on project financing. We have lots of parties knocking on the door. I think we can do a hefty amount of it as debt, so as to limit the shareholder dilution. I mean, we're pretty cognizant of that. Again, you just have to wait for us to get through these next, call it 9 months. But I think on the other side of 9 months, this project's fully funded to be built.
Great. Can we talk about tailings? And we talked about ESG, and so how do your tailings look environmentally?
Kelly?
Sure. So it's no secret there's mercury and arsenic at Eskay Creek. It's well known for its mercury and arsenic levels. They are isolated to the one horizon, the contact mudstone horizon, which was high graded out, mostly mined out historically. So on a tonnage weighted basis, we only have 18% contact mudstone left. We work through that in the first few years of the mine life. That's because the grade is higher in the contact mudstone. There's a direct correlation between grade and deleterious element levels. And then once we're through that, we're into clean rhyolite ore, which is the horizon just below it. So all the tailings were stored in Tom McKay Lake historically. They were all stored subaqueously, and there's been zero remobilization of any of those deleterious elements. So it has been monitored at least quarterly, if not more often than quarterly, for the last 2 decades. So we're in excellent shape. We're very fortunate to have all that historical water data. Everything goes towards one drainage point at Eskay Creek. It's a permitted tailings storage facility. We'll have to do a bit of an upgrade to the berms and some road access, but it has ample capacity for all the tailings we envision currently in the mine plan. We've even had some discussions with our Tahltan partners about the possibility of adding some of the potentially acid generating waste rock material into that lake as well. So listen, we're in great shape. It's already been discussed with Tahltan and the government, and everyone has agreed that putting the tailings back into the exact same existing tailings storage facility makes the most sense, because we already know that it works and there's no remobilization of the minerals with 20 years worth of data. So we are in an enviable position from a lot of greenfield sites, because permitting TSF is usually what takes the most amount of time, and we already have a permitted TSF. So a big check mark in the right direction. And yeah, I think I'll leave it there.
That's great. That's a great answer. So just maybe to follow up on that, and then I'll pass to Campbell. Noticed a few things you guys have been doing with the Tahltan in terms of like social and community work. Can you just maybe touch a little bit on that relationship? And I think some shareholders may have been looking, concerns around some other companies in the area not getting along so well with them. So maybe just touch on some stuff that that you guys are doing with them.
Yeah, let me take it, and Kelly, feel free to add if I leave anything out. I'd start by saying the Tahltan are a pro-mining nation.
Mm-hmm.
They often describe how they were mining obsidian, thousands of years ago on the side of Mount Aziza. Like, mining is in their culture. They are pro-development. They are a commercial nation. They were traders for thousands of years. So, our sense is they want to see projects developed, but there are certain areas that are sort of, let's call them, no-go zones. Whether it's for cultural reasons or environmental reasons, they don't want to see development there. And I think, as mining companies, you have a responsibility to sit down and talk with your host people and find out what areas They're gung ho to see development happen in, and what areas they don't want to see it happen in. And I think mining companies that don't sit down with the Tahltan and have those conversations are prone to getting into trouble and having problems. So, I think, maybe you could say we learned the hard way with Spectrum. We powered ahead on exploration there, and then found out sort of a little bit later, as we developed a closer relationship with the Tahltan, that they didn't really want us working in Spectrum. So we took a step back and we listened. So I think, that's my advice to all other, companies that are coming into the Golden Triangle is make sure you sit down and talk to the Nishka and the Tahltan and find out the areas that they want to see developed and the areas they don't. You can save everyone in the industry and the government and the Tahltan a lot of pain by having that conversation early on.
And, gone are the days when you can go into an area and mine away without consent, right? We talk about UNDRIP, United Nations rights to the Indigenous people. That is the way forward. That is where mining companies have to go. That is where our industry needs to go. Consent and working in partnership with Indigenous peoples. And Skeena wholeheartedly believes in that. And we want to set the standard for that in British Columbia and hopefully in Canada. And we feel that that's what we're doing with the Nature Conservancy, the investment from the Tahltan, and we will keep doing things like this. This is where the industry has to go, and Skeena wants to lead the way on doing that.
Okay, guys, great, thank you. Cam?
Sure. Really just have one question left. Progress on the Donnelly JV.
Oh, so GJ, we sold GJ to Newcrest. Yeah, so Donnelly was a target on the GJ project, and we actually should have mentioned that when we talked about majors in the area. So Skeena sold our GJ project to Newcrest last year for 7 million, was it, Walt? Which Walt thinks is way too cheap, and we should have sold it for more. But that project's no longer ours. It now belongs to Newcrest. So we're focused on Snip and Eskay.
Okay. We have some great questions, and I think it's time to close. So I want to thank everyone for tuning in. Please share your feedback on your way out, and it'll get to Walt and Kelly in due time, very quick time turnaround. And this replay will be available at amvestcapital.com/replays in about an hour. And if you have any further questions, Kelly, Walt, and Amvest aren't hard to reach. With that, maybe I'll move it to you guys to close and maybe kind of wrap up. Everyone's asking about when production and all that. So anything you want to wrap up with, now's the time, and we'll see you all later. Thank you.
Thanks.
Any closing comments? Yeah.
Yeah. Closing comments. Yeah. I guess I would just say, with regards to permitting and timelines, stay tuned. We're working diligently with the government and the Tahltan to come up with something we're calling the permitting charter, which will lay out that full schedule. And my hope is we'll have that completed by early June. So that'll be, I hope, a real catalyst for our stock and our company. Putting some definitive, dates around, how long is it going to take us to be in production. So stay tuned for that. Kelly, anything you want to add?
No, I think we covered it all. Thanks, Amvest.
All right. Thank you, everybody. Good day.
Thanks.
Bye.